Hello everyone. Today we're discussing Halozyme Therapeutics, a company I believe the market is deeply mispricing. Currently, it's trading at a forward PE of 8, despite management's projection that they will grow EPS at 26% compounded rate through 2028. This projection does not include the impact of Halozyme pending patents, so I would assume that the actual EPS could grow even faster. Halozyme's core product is Enhanza, a technology that turns slow infusions into quick shots, allowing them to collect high-margin royalties from massive partner drugs. Recently, Halozyme acquired Electrify to bolster their portfolio with Hypercon tech, which makes these injections even more concentrated. Those kind of delivery technologies serve as patent extenders for big pharma partners, and they help hospitals to offload their workload. In other words, everyone wins. With adjusted EBITDA margins projected to hit 73% by 2028, it makes you wonder why a company is trading so low. If you want to hear my thoughts on why market has it wrong, stay tuned. Enhanza, this is Halo's flagship asset. It uses a proprietary enzyme which temporarily breaks down the barrier under the skin to allow high-volume drugs to be absorbed rapidly. This technology allows to transform painful hour-long infusions that could take from half an hour to 2 hours into quick injections that would take only 2 to 5 minutes. Also, they improve existing shots by enabling larger volume in single injection and extending the dosing interval. As I said earlier, this technology helps everyone. For patients, it significantly reduces time commitment and therefore treatment burden. Instead of being tethered to a hospital chair, patients can often receive their life-saving meds in minutes, sometimes even through home administration. For hospitals, it solves capacity and cost problem, frees up critical infusion chairs for other patients, and reduces overall healthcare costs by moving care out of expensive clinic settings. For big pharma, co-formulating drug with Enhanza can grant additional exclusivity, extending a product patent's life well beyond the original infusion version. In 2025, Halozyme has acquired Electrify to add Hypercon technology into their patent portfolio. Hypercon technology is an innovative approach that allows to pack 4 to 5 times more medicine into single dose. By concentrating the drug, it drastically reduces the physical volume of the injection. Patients can use small, simple auto-injectors at home rather than needing high-volume administration in a clinic. The strategic reason behind this acquisition is obvious. While Enhanza allows skin to be more receptive of the large volumes of the drug, Hypercon shrinks the liquid itself. Those two technologies synergize. It is significant because it allows big pharma partners to transition existing Enhanza products over to Hypercon, meeting their patient preference for smaller needles while extending royalty durability into the 2040s. I think the biggest misunderstanding is that some investors are laser focused on the core patent expirations in 2027 in US and 2029 in Europe, but the patent cliff narrative misses the actual structure of Halozyme's contracts. There is a contractual durability to royalty stream, typically run until the later of 10 years from the first sale or the expiration of the last valid claim of the patients covering the specific co-formulated product. In other words, until the drug is selling or for 10 years. Because these co-formulation patents often extend well beyond the core enzyme patent, Halozyme projects royalty durability extending far longer than their patent. Business is also far from stagnant, with 15 products currently in the development, multiple in phase 2 and 3. They are expecting to sign 1 to 3 licensing agreements for Enhanza and 1 to 2 licensing agreements for Hypercon in 2026 alone. And by constantly adding these new targets, including new areas like nucleic acids and ADCs, Halozyme is building a highly diversified and resilient royalty stream that isn't dependent on any single patent date. Currently, Enhanza have 10 globally approved products, while Hypercon Technology projects to achieve 1 billion royalty revenue in 5 years post first launch. I know that often Wall Street prices any R&D in biotech as failed, but most of the drugs in the research pipeline right now are the existing drugs that are enhanced by these two technologies, so chances are that they will pass are pretty high. After all, they are not inventing a new drug, they enhancing delivery method of the existing one. It is much easier hurdle for clinical trial to pass than the regular process. Now let's talk revenue. In 2025, total revenue has reached $1.4 billion, which is 38% change, of which royalties are $867 million, which grew 52% year over year. GAAP diluted EPS for the year was $2.56, while non-GAAP diluted EPS came in at $4.15. That is mainly due to acquisition of Electrify. Management has also projected total revenue between $1.7 billion to $1.8 billion, which is 22 to 30% growth year over year for year 2026, with an EPS of $7.75 to $8.25 per share, which is 87 to 99% growth. Also worth mentioning that management is highly shareholder friendly. We can see that they've been constantly buying back shares, and they completed 750 million share repurchase program in mid-2024 and immediately authorized a new 750 million program, deploying capital aggressively throughout 2024 and 2025. They have also restructured their debt in late 2025, issuing $1.5 billion in new convertible notes at incredibly low interest rates of 0 and 0.875% to fund their repurchases and mergers and acquisitions. The royalty business is a very high margin business. We can see that for 2025 their operating margin was 58%, and that is usually something reserved for SaaS and software businesses, not biotech. Currently trading at $66 a share, with a market cap of roughly $7.6 billion, so trading at forward P of 8 for year 2026 or at forward P of 652, I believe Halozyme is simply mispriced. I'm making this video a little bit in a rush because Q1 2026 earnings are scheduled to be released on the Monday, May 11th, and I've seen a lot of bullish analyst reviews for the company in the past week. As of another catalyst, Halozyme is currently engaged in a lawsuit against Merck on their blockbuster drug Keytruda SC, and Halozyme has already won preliminary injunction in Germany. Now, that doesn't automatically mean that the lawsuit will be won by Halozyme in other regions, but usually when a single region important as Germany is already lost, it is in company's interest to go for settlement rather than battle out in the courtroom. So that could be another new revenue stream for Halozyme. And I have to underline how big is Keytruda. It is the biggest revenue source for Merck, so even a tiny royalty from it could be a big change for mid-cap company as Halozyme. Now, another piece of news, which is a bit random but bullish, is that Darren Shelgrove, who spent 27 years at Johnson & Johnson, he was appointed as Chief Financial Officer at Halozyme Therapeutics. Now, how often do you see director moving from Fortune 50 giant to a mid-cap biotech like Halozyme? It's a rare transition of talent. But I still view it as a bullish signal as the quality of management increases. To sum it all up, I see a clear mismatch between Halozyme's current valuation and its massive growth projection. It is the definition of asset-light resilient company. While they depend on external partners to drive royalty growth, the sheer quality and diversification of that roster, Johnson & Johnson, Roche, Takeda, creates low risk, high reward profile that the market is currently discounting. They seem to be stuck on the 2027 patent cliff narrative. However, that ignores the contractual royalty durability, and it also ignores acquisition of Electrify and Hypercon technology, because Hypercon doesn't just protect old revenue, it sets a new standard for the industry and could drive even more royalty revenue in the future. But until said revenue would be more visible, more contractual, Halo would be trading with high volatility as it has been for past 5 years. Like if you look at the graph, it's going up and down every 2 months. And even if growth would be not as impressive, at forward P of 6.52, like how low could it get? That is probably all that I have to say. Like and subscribe, get rich. Thank you for your time.